Hello, everybody, and welcome to episode number 56 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Broadway Billy, and I'm joined here by my insidious co-host, former market maker of 20 years and current day retail trader, a man with a lifetime record of 200 companies taken public. He sold so much worthless paper that he got environmental activists breathing down his neck. I am talking about the man who's done more flips than Shamu. Pete Brown, Tom Selleck, JJ. How's it going, man?
Good, brother. What's going on?
Oh, nothing much, man. Just like we were talking about beforehand, just fried from this crazy week we've been going through, and we're going to finish it up with our guest, who is an American entrepreneur, investor, host of the Pomp Podcast, one of the most popular podcasts in business and investing. He's invested 100 million plus in early stage companies, including multiple unicorns, co-founder and partner at Digital Creek Assets, and one of the most popular and recognized advocates for Bitcoin and decentralization. Of course, I'm talking about Anthony Pompliano. Pomp, how's it going, man?
I'm doing good. How are you guys?
Excellent, man. Excellent. It's it's nice to see a fellow Italian doing his thing out here. Pomp, I want to just start off, ask you, what's your favorite dish?
That's a good question. If I had to go with anything, I'd probably go with chicken parmesan or something, just something real simple, but done the right way. There's some people who screw it up and some people who can make it well, but if you do it right, then nothing beats some of the staples.
Nice, yeah, nice chicken parm for sure. Give me some veal, give me some gabagool, Oh man, Pomp, thanks so much, man. Joining us this unprecedented week we just lived through, one for the history books, no doubt. It started off with a pump on GameStop by a subreddit group taking down a hedge fund along the way. What was your first reaction to this news?
Well, at first, I think I came across Wall Street Bets maybe, 6 months ago in passing. I thought it was a funny name. It was kind of during all the craziness of the stock market post the central bank kind of, starting to manipulate markets. And that was pretty much it. Didn't really think too much of it. And then this past week, I was like, wait, what are those guys up to again? I guess they're in the news. And it took me till like maybe Tuesday night, I think it was Tuesday night or Wednesday morning. Whenever I started looking and like going in and reading it, I was like, oh, like these dudes are really going to pull this off. Right. And it already kind of like started, but it was like, I don't know, $60 or whatever when I was looking, and I was like, oh, this isn't going to stop. And then I think the second thing that I didn't quite understand was just how short Melvin Capital was and some of these guys. And so by, 12 hours later or whatever, I was like, they may bankrupt a couple of them. So obviously, Wall Street's going to Wall Street and they saved themselves, but it was pretty crazy to watch the whole thing kind of play out.
Really was. I mean, and JJ, this is a stock we've been watching for a good amount of time, right? Like the short float. I mean, Pomp, the short float was over 100%. However, that's a possible thing. Jay can explain it better than me. which I let you will. It's like, how do you have a short float that's over 100%, JJ?
Well, there's a couple of things that happened. The last time this happened, it was actually when I did it. I set it up so we had 4 million in the float and a 5 million share short. Mm-hmm. And I did that so we could hold the stock at $30 on NASDAQ so we could get a finance. But I haven't seen one of those in a while. And I just kind of suspect, I don't know the fund guys because I'm retired now and all that stuff. But, I have a suspicion that maybe they were short against a financing that they thought they were going to come through on. Because you always like to lean on a company to push the thing down to get paper cheaper. And maybe the company told them to go pound sand. And right at the worst possible time, month end, bada bing, bada boom, this retail just tsunami comes in, and everyone's hooped. The clearing firms are upside down. And I could just see the clearing firms, all these old guys sitting around going, what the fuck is Reddit? Because, you know, why are we so offside? What the hell is this Reddit? Right? Who is that? Right?
Yeah.
You know, so
JJ, why does the end of the month matter so much?
because generally people like to square off their books. I mean, you run money, right? So there's a lot of these guys that are running on margin and stuff like that. And a lot of times I would use a market maker's inventory or a Swiss bank to hide a short position for a couple of months. So at the end of the quarter, they got to get it off their books, right? So, you know, something like that could happen. And month end is a great time to do short squeezes because market makers don't want to go crazy on the risk and short to retail. So they'll sell the minimum at the offer and there's lift. And that way you can really, you know, you can do some damage at month end if you properly manipulate a short. And this thing, I'm not saying it was manipulated, far be it, but it's just human nature. Everybody just jumped on it. And I'm sure, you know, people at DTC and CNN, like they were just probably just freaking out. You know, I could just imagine what it was like inside the clearing firms.
Yeah, insane. And you know, I've heard on top of it as well that I guess one of the theories out there is that some of the other funds could have smelt some like blood in the water type and joined this to like, hey, okay, we can take some of the competition out. You think that's plausible, Jay?
Mm-hmm.
Yeah, for sure.
When there's blood in the water, the sharks will come.
Yeah, for sure. So just a reminder to the listeners, if you guys would like to trade alongside JJ, myself, and a supportive community of traders, we trade futures, equities, and options. Join us at microefutures.com. Pomp, this has to be a one-off type of event, right? I mean, with all the money, right? This is what I'm thinking during this time, right? Like all the Wall Street bets plus retail money that's behind this type of movement. This can't equal the amount of money that these funds have. Do you see this being a continuing trend where these guys can do some damage to Wall Street?
Yeah, well, I think there's three different kind of analysis, right? So one is psychologically, absolutely. Retail has weaponized investing. And, you know, there's people posting saying, I don't care if I lose all my money or not, I ain't selling. How do you, you know, literally, how do you compete with somebody, right? I always tell people, like, it's one thing to go into a fist fight with somebody if they think they're in a fist fight and they're going to you know, stop fighting at some point. It's another thing if you're thinking that you're walking into a fist fight and that person thinks they're fighting for their life, right? Because they're literally, one of you is going to die. And so I think that, like, that's kind of the mentality here from some of these folks, just psychologically. And so I think that you've really, really got to pay attention to that, because now you got irrational actors in the market, right? And so that changes some stuff. The second thing is absolutely what you're saying. Like, you know, look, it's great. You can have the retail investors, you know, with their capital, but you need somebody who's trading the momentum or somebody who is kind of amplifying what they're doing, right? There's no way that, you know, guys who are buying $50,000 worth of options or $100,000 worth of options should be able to push a, you know, multi-billion-dollar hedge fund around. And so there's definitely other people. I don't know if I would go as far as say like they're colluding together. I don't think that's the case, but definitely there's people who see order flows and, you know, obviously Citadel's front running all the Robinhood stuff that can really kind of get behind and just amplify what they're trying to do, whether they realize it or not. And then the third thing is I think that the attack here, Wall Street is very much, they're a bully, right? And so when they bully people, what they expect is those people to lay down. And right now they're bullying somebody and they basically got punched back in the nose. And so now what they're all doing is they're all, you know, turning around, squaring up to the threat, and they're all going to be on guard. But I actually don't think that they're going to get punched in the nose again. What I think people are going to do is they're literally just going to leave the stock market and they're going to go play in crypto land, right? Like, why would you continue to play in the stock market if there's a decentralized digital ecosystem where you can trade 24/7, 365? The volatility is way higher. There's way less kind of trading volume. So if you're going to manipulate stuff or whatever, like, you're going to be easier said there than anywhere else because market structure. And then also there's way less of kind of the electronic trading of the hedge funds, of kind of all the like nasty stuff that happens in the stock market that people don't like to talk about. There's very little of that going on in crypto. And so I just think that naturally, like if you're a trader who's looking to clip points or drive returns, you're just going to leave and you're just going to go find something else to play with. And to me, that's actually going to be super detrimental because if enough people do it, that business model of taking advantage of the retail trade on the stock market ends up actually crippling them more than anything because their cash flow goes away. Right. And so, we'll see kind of how all this plays out, how long it takes, whatever, but that's probably the three things that I think are likely to happen.
Yeah, for sure. And that's something I was going to bring up to you is that this whole movement seems a great selling point for decentralization, a great selling point for Bitcoin, crypto in general. I mean, especially with what Robinhood did, which seems so blasphemous to me that that's their target demographic and they shut off the buy button. Pomp, try to put yourself in their shoes. Like, what are they thinking? Are they getting leaned on by somebody? I'm assuming they're getting leaned on by somebody, right?
Yeah, look, I think that, there's two things, right? So let's walk through two separate scenarios. Robinhood yesterday and Coinbase today, right? And Kraken and a couple other crypto exchanges. So what Robinhood did was Robinhood basically shut off the trading of specific securities, not all, but specific ones, and then also forced liquidated some people as well. And so what it comes out later is like, basically they were about to go bankrupt, right? Like they were about to be out of money. And so they pulled on all their credit lines. They had no more cash. And so literally overnight they went out, they got more credit lines. They could raise $1 billion in equity capital. Like, I mean, this is serious stuff, right? And so when you see that happen, you realize that I don't think anyone from the hedge funds called necessarily and was like, shut down the trading. Now, do I think that there was conversations around slow it down and, do all that? Sure. Like, I don't know if you necessarily, it's a pretty egregious step to outright just stop trading, like on specific stocks. And so to me, like, that's probably more likely they just wanted to avoid any kind of like bankruptcy situation or like really, really bad cash crunch. But absolutely, I'm sure Citadel was having some conversation, right?
Well, I mean, if I could interject, I mean, also there's a technical problem when you're trying to short to retail to fulfill order flow and there's no supply. So for a market maker at month end, the risk is just out of the control. And now we only have 10 market makers of any size. In the old days, we used to have a red book with hundreds of market makers to spread the risk around. Now we got 10 firms. Each one of them has a risk control department. So if something's thin and it's very hard to short to retail because you short, 1,000 shares at $300, the next thing you know, you're 350 bid and you're offside $30 and you got order flow coming in all over the place. How are these guys? How can they give you liquidity? So they had to slow it down, right? And you know what? CYA is the number one thing in the brokerage industry, right? Cover your ass, right?
Yeah. I think the other thing too that we've got to remember is like if you then look at Coinbase, Kraken, even Binance, a couple of these guys, they went down or they restricted trading, disabled trading, however you want to kind of whatever vernacular you want to use. But that was pure. There's so many people signing up. There's so much trading volume that our systems can't keep up.
Yeah.
So that has nothing to do with an individual, asset, right? They didn't say, hey, you got to stop trading Bitcoin, but you can trade these other ones. It was literally just, we literally cannot handle this much order flow. We cannot handle these many new people signing up. And so I don't think that's what was happening at Robinhood, right? Like, I think it's important to kind of understand the difference between those two things because one is an intentional, for whatever reason, it's still manipulation of a market because you're basically taking out on a security by security basis demand from the market. The other is just, as a product, we literally have to, wave the white flag and we can't handle this much order flow. And so, we've got to scale up to be able to handle it. And it'll take us an hour or two.
Mm-hmm. All right, Pomp, you manage assets. So I know you understand how important risk management is. A lot of these Reddit traders, as we've seen, we even talked about a little bit of the fanaticism, right? I'm not selling no matter what. They're YOLO trading. We got a lot new to trading. Do you mind just speaking to them about the importance of risk management?
Yeah, look, it all depends what you're optimizing for, right? For somebody like me, I don't trade at all, right? I mean, I've got kind of really long-term, very kind of deep thesis, conviction bets. And I allocate capital and then I sit and it's super peaceful. I don't worry about any of this stuff. I'm frankly just watching because it's entertaining, right? But I don't make any investment decisions based off of any of it. I'm also not a good trader. So like, I know kind of where my circle of competence is and I stay there. There's some people who are fantastic traders and they're the sharks in the market and they're, cleaning up and they couldn't sit on their hands for 20 minutes if you asked them to, right? They always got to be, doing something. And there's a bunch of people in between. And I think the first piece around risk management is just know who you are, right? Like, are you the trader or are you the investor? Neither one's right or wrong. It's just, what do you enjoy doing and what are you good at? Then the second thing I think from a risk management standpoint is like the number one rule is just never get to the point where you can be blown up completely. Right. And so, speaking of that, the hedge funds learned that lesson again this week, which is pretty funny. But I think that's kind of a big piece of risk management. And then the third thing too is that there's two different ways to really kind of invest. I think we've really beaten to people's head, diversify. And that's fine. But, even Warren Buffett and all these guys, like that's only if you don't really have an expertise, if you don't really, really know what you're doing. But if you really know what you're doing, you're actually going to be heavily concentrated. And so that doesn't mean that, hey, you just got off your couch, you got a Robinhood account, and like all of a sudden you should think that you're an expert. You should go, YOLO long into a concentrated position. It just means that understand, like, as you build up an expertise and as you feel like you're starting to really get an edge or an advantage somewhere, you don't want to have 500 positions. Right. You're probably better off just understanding, hey, here's the 5 things I believe in and just watching them really closely. And so I think that people just generally should follow kind of what I consider like timeless investing and financial advice, frankly, because it's timeless for a reason, right? Because it works. And so don't try to outsmart people or be smarter than the market. Just do the things that people know work and stop trying to all get rich tomorrow and just kind of, win each day and you'll be fine.
Right. Yeah, because I'm all for this movement, as I know you are as well. It's just we want, we take things professional, here as well, and we just, it could add bad for some people. So I just wanted to get that out there to the people. Pomp, you were a sergeant in the Army. I'm just curious to how your experience and how that shaped maybe your life view or your discipline or just your approach to investing in general.
I mean, I was a shithead before I went in the Army and I came out a little bit less of a shithead, frankly. That was pretty much it. Look, I went in when I was 17 years old. I got deployed when I was 20. And when I was 21, I turned 21 in the desert in Iraq and ended up leaving the military as a sergeant in the infantry when I was maybe 23, 24 years old. And it was one of these weird situations where when I got deployed, I was deployed with a bunch of older guys. And so they made me grow up real fast, right? I was worried about what parties and girls and all that. These guys are worried about their mortgages, their wives, their kids. Like you just being around that for a year in kind of a, combat heavy area that is very much just like life and death and like very serious in some ways. You just realize like, hey man, like there's like real life out there, once you get done with college and all that. And I think the other thing that it taught me is what I consider to be the most important lesson in life, which is like, we're all going to die. Like we all die. That's it. Game over. And so you really got to value time. And I always ask people like, I meet a lot of young kids, especially, and I always say to them like, cool, you want to be rich, right? And they're like, yeah, I want to be rich. I say, why? And most of them don't have a good answer, right? But the one answer that I hear every once in a while, which I think is actually the purest answer, is because I want more time. And so what you start to realize is you're trading time for money or money for time. And that's actually a pretty good reason to want to have a lot of money is you get a lot more of your time back. But I think that there's people who want, want a freaking Maserati or a watch or impress somebody or whatever. Like, if that's what's driving you, sure, that'll, be a motivator for some period of time. But at some point, what else are you going to buy? Right. I ask people all the time, all right, cool. If I give you $100 million, what are you going to buy? Like a jet. I'm like, all right, so you spent $5 million. Now you got 95 million left. Right. What are you going to buy? Well, I buy a yacht. Okay. You spent another 20 million. Okay. You still got 3/4 of the money left. Right. Like, what are you going to spend $100 million on? And then, then they're like, oh, I'm going to buy, and they start coming with like crazy stuff. And I'm like, I thought you needed $100 million to retire. Right. Like you're crazy. And so I think it's just people need to, it's good to have goals and be aspirational and kind of motivate. I think we all are. It's just a matter of understanding kind of like why. Like, why do you want to do this? And then it's easy, right? Because then once you know why and you understand, like, okay, if I want to retire and let's say I'm a 25-year-old kid, I want to retire. Cool. How much money is that going to take? Right. And they think it's some crazy number, right? They're like, I need 100 million. That's kind of my point. It's like, well, you actually probably don't need $100 million to retire, right? Like, maybe your number is 5 million. And if you think you can retire on $5 million, then okay, how much money do you need to make? If you want to retire by 35, it's 10 years, right? Cool. You need to make $500,000 a year for 10 years. And that needs to end up in your bank at some point after all your expenses, everything. How are you going to do that? And you just make it like a plan, right? It's just, hey, this is my goal. Here's the plan. Here's how I get there. Either you hit it or you don't. But I think that's the type of stuff that when you just remember, like, there's this finite aspect of life, then everything becomes just more obtainable and realistic. And I think that investing is probably the area where that manifests itself the most.
Yeah, absolutely. That's why I'm so drawn to the Stoic philosophy. That's what they really practice is, some of them almost to the point of envisioning their death, like getting so realistic about it. And no, I love it, man. Like, good stuff. Something me and JJ often talk about, and I know JJ's highly curious about this, Pomp, and you've alluded to it before about the manipulation being less or maybe not existent in the crypto markets. Could you just speak to that in general?
Well, okay. So hold on. Let me clarify one thing. When I say manipulation, there's two different types of manipulation, right? There's price manipulation, which happens in every market. Literally in the sneaker resale market, there's price manipulation, right? In the housing market, when you buy and sell a house, there's price manipulation going on. What I'm talking about is more the structural manipulation, like we saw the other day, where literally, things are getting shut off intentionally. Immediately, people think that, oh wait, hedge funds are calling and doing this or that. Being able to short 120%, 140%, whatever it was of a stock, like that stuff is much more kind of market manipulation done from a structural standpoint. And there's very much kind of a top end and a bottom end, and the bottom end loses all the time. But when it comes to price manipulation, I mean, that's happening in, every market. And so that happens in crypto for sure. My favorite crypto chart to show people is like, the Bitcoin chart. It's going sideways for, 12 hours. And then all of a sudden it dumps $2,000, goes sideways for 4 hours, and then comes back up exactly $2,000. Like, okay, that literally just looks like a perfectly shaped, like three sides of a square, right? You're like, how the hell did that happen? There's no way that was organic. And, by the way, I don't know, right, for sure. But what I do know is that I'm not, I don't need to be a genius, look at the chart and say something weird happened there. And so I think that people just got to remember that, it is the price is different than the market structure, but I think that at least with price, people can see it, and they feel like they've got some control. With the market structure against you, you're basically just flying blind.
Yeah.
Can I quickly interject, because you're a fund manager, and so you're running size. I've never traded crypto. I find it fascinating because you guys have all these exchanges and all these different products, and they trade differently. How do you work size in this market? Like,
So here's like I'll throw a couple of data points. So one, I do no trading, right? Which is a massive advantage I have, because everything I said about in the trading in crypto is, it's 24/7, 365 on 10 exchanges with 50 assets. Like, good luck, right? Yeah. You're literally going crazy. And so what I find is that when it comes to size, like, you maybe can trade, like when we're talking like real size, $100+ million, maybe you can trade 2-3 assets, Like there's just not that much volume, especially when you then break it down across a bunch of these exchanges and a lot of these tokens. And so if you want to be able to put like full positions on and stuff like that, you really got to be careful. Okay. What I end up seeing is, let's take the Bitcoin market that you can trade a lot of size there. Now, can you go and do like I don't know, some sort of like smart beta strategy with $500 million on a single exchange? That probably still isn't really possible on most things. And so I think you just got to, size in crypto is not size in the traditional market. At some point that'll change, but right now,
exactly.
That's kind of how I look at it.
And so, and when you're working this stuff, like it goes through a centralized exchange. This is something because forgive me, I'm an old guy, so I'm trying to understand this stuff. So different exchanges quote different prices. So do people arb between the exchanges?
Yes.
Okay, cool. Okay, this is cool.
In 2017, especially 2017, it still goes on now to some degree, but 2017, I mean, there was literally, $1,000, $500, $200 arbs going on. And it was just pure, hey, I've got an account on one exchange and I can, buy it at X price and X plus $400 on another exchange. And so it doesn't take a rocket scientist to figure out that if you can move the Bitcoin from one exchange to the other quickly and sell it, then you're going to make money. Right.
Cool.
And so that's a big one. The other thing too, I think that goes on a lot is there is a lack of Bitcoin sometimes, right? So it's like today, one of the things was like literally like the exchanges like didn't have enough supply, right? There's just not enough people in the market that want to sell. And so it's a little bit different than like when you have everything centralized in a single exchange or two exchanges, take NASDAQ, NYSE, whatever, you get lots and lots of volume. This may be a situation where you take up, I don't know what the daily volume is on Bitcoin, but let's say it's, a couple $1 billion, right? $5 billion, whatever it is. That's not all on one exchange. So you may have an exchange that only has, $100 million of daily volume, and you get 2 or 3 big buyers come in the market. Like you quickly can change that supply demand, in an order book. And so you can get, things that get out of whack pretty quickly. And so the exchanges obviously are aware of this stuff. They try to, quote prices based on blended indexes and they're kind of doing all that. But it definitely is a unique market that has unique aspects that aren't really available or present themselves in other ones.
It's fascinating. Are there, sorry to interrupt, are there liquidity providers in Bitcoin, like market makers who will provide liquidity? Yeah. Okay, cool.
Yeah, there's a number of them. They all varying levels of sophistication. But there's folks like probably the one that you would feel like is the most similar is I don't know, like Susquehanna. I think John.
Oh, really? Cool.
Will do it, and then also you get like people like this Alameda Research. There's a gentleman, Sam Bankman-Fried. I think it was at Jane Street. Don't quote me on that, but I think it was at Jane Street and he left and started it. And so, people who know what they're doing, have a lot of experience in the traditional markets, obviously see the opportunity.
Yeah, that's cool. Interesting. Thanks.
Pop, with a lot of, I think especially the end of last year, there was a lot of news coming out about a lot of funds getting a piece of Bitcoin. It seems to me that the volatility, like we're not getting as big as swings in Bitcoin. Do you see this continuing? Like it staples out a little bit as more and more people come in?
Don't speak too soon, man. Remember, it crashed 20% in a single day, like 2 weeks ago, 3 weeks ago, and everyone thought the world was ending, right? Yeah. It's like, look, I mean, it's all relative, right? So what I'll say is Bitcoin at I don't know, sometime in November was $10,000.
Yeah.
Right. And so you're talking about an asset went from 10,000 to 40,000, 400% increase in 90 days, right? Or whatever it was. Yeah. And then it dropped 20%. And when it dropped 20%, it actually dropped, it was close. It felt like it was over a couple of days. It was more like almost like a 25% drop. So like $10,000, off the price. And so like when that happens, where it drops from 10,000 to 8,000, like that's 20% drop. Like, yeah, okay, it's 20%. When it drops, from let's say it was 50 to 40, now you're talking about $10,000 swing. That feels pretty different, right? And so I think that the percentages are getting a little bit smaller, but now it's bigger dollar amounts. And so, you can imagine if you're the guy who comes in and goes, I'll just buy one Bitcoin, right? You buy it for $40,000 and it drops all the way to 30. Like I just lost $10,000. Yeah. Well, that was the price of a single Bitcoin, 90 days ago. And so I think that it's something to watch, but I do think that as you get more liquidity in the market through more adoption and more diversified holdings, you'll get more utility out of it and you'll get less volatility. Yeah.
Well, like I mentioned to you earlier, I was a professional poker player firsthand, and I feel like poker players had to been some of like the first adopters, really, because of the use case, especially being an American online poker player. A lot of times you had to transact through Bitcoin. So I just think back to those days, man, and that's why I mentioned with the volatility. It's like it's not what it used to be. It's settling down. People are coming into it. It's great to see, man. And Elon has been a supporter of BTC. It's the only thing in his Twitter bio, at least last time I checked. I know he did that today. Man, and you said Tesla and SpaceX adding BTC to their balance sheet is now inevitable. Your conviction is pretty strong here, huh?
I don't know when he's going to announce it. I don't know, that they're going to do it, but I feel like it's, I would be shocked if we end this year and Tesla hasn't put in Bitcoin on their balance sheet. Shocked. And really it just comes down to he understands it. Like he didn't, now he does. And now that he understands it, you just can't learn about this stuff and walk away and be like, I know about it. I have, $500 million. I'm not going to put any of it in Bitcoin. Like that just doesn't happen, right? Like if you understand and you have access to capital, you convert the dollars into Bitcoin. And so I don't know how much cash they have on their balance sheet, but it's not $5, right? It's a lot of money. And so I have no doubt that he's going to do it. Even if he literally does 0.5%, and he does it as a complete marketing gimmick just to get all the Bitcoiners to be Tesla fanboys, he's still going to do it, right? So like why he does it, people will debate, is it healthy, is it not, whatever. But like, I just don't see a world where he doesn't do it now.
Yeah. Man, we got people like yourself, Winklevoss twins, Chamath, Dave Portnoy, sticking up for this movement, like champion of the people. That's what it's coming across as. You think it feels like to me this like a changing of the guard is coming here from like a cultural, societal standpoint. Are you seeing things the same way?
Yeah, look, I think everyone you just mentioned has two things in common, right? They all have a chip on their shoulder for whatever the reason is, but they're all from a personality standpoint, like probably pretty more similar than not, right? In terms of just, type A personalities, chip on their shoulder, have something to prove, don't mind kind of being put in these uncomfortable positions in public, all that kind of stuff. I would even go as far as to say all of them and me are loud and brash and, all that kind of stuff. The second thing though, is they're all students of the internet, right? Or citizens of the internet in some form or fashion. And so some of them are a little bit older than others. I like to say actually in that group, I'm probably the youngest. So, all those old guys, but I think that, it's just, they understand the internet, right? And so whether it's the memes and the GIFs, whether it's just the way to kind of talk shit on the internet or the way to kind of appeal to people, the populism that kind of pervades in some of these situations, the standing up for the little guy, like all those things are just, if you're a citizen of the internet, like, this stuff and you see it, right? Like if I see Dave Portnoy about to get into the, in the mud with somebody, I'm just like, whoever the person is, like, you're about to fight the expert. Like, don't do it. Right. Like, what are you thinking? Are you crazy? And so like, a perfect example is like Steve Cohen the other day, right? Or 2 days ago or whatever, started chirping. And I was like, dude, you were about to get dragged on the internet harder than you've ever been dragged before. And you have no clue what's coming. Right. So it's just like at some point, like I tweeted earlier that day, I was like, don't fuck with the internet, right? Just like when it's time for the internet to play, the internet is undefeated. And so you just don't want to kind of get on the wrong side of, forget that group you mentioned, like just anybody that has any sort of audience on the internet.
Yeah. It's incredible. When people point out this movement, Pomp, this Wall Street bets, taking out hedge funds, and along with other numerous points, being a sign that we could be in a bubble, what is your take on that?
Sure. It seems like we've been in a bubble for the last decade. They've been saying that over and over and over again. But somehow the bubble never popped, right? So, whatever. I'm a big let the free market reign, and everyone just open the markets, let everybody play, and the market will be the referee. If you're an idiot and you buy overvalued stocks, then you're going to lose money. If you're an idiot and you sit on the sidelines because you think the stocks are going to correct and they don't correct, then you're going to lose, right? Like it's this whole idea. I'll give you a great one. I saw Senator Warren is asking the SEC to make sure that stock prices represent fundamentals.
Yeah, that was a hoot.
Like, okay, so just so we're clear, we're going to allow the regulators, right? And by the way, I actually don't think the regulators want to do that, right? I think the regulators will be the first people to be like, no, we're not playing this game. Like, that is not something we're going to do. But just like, it just shows, I think, a lack of respect in some ways of like how difficult that is, right? Like, so GameStop, right? I don't know what it's trading at, 50 billion or 40 billion, whatever the hell it is, right? Like, what's it worth? I don't know. 50 billion seems pretty high, right? Like, sure. Zero seems pretty low. So like, I don't know, somewhere between 0 and 50, like, it's just like, how do you kind of determine this stuff? And that's ultimately like, my opinion doesn't matter, right? Neither does anybody else's. It's like the market's going to decide what the value of the company is. And sure, sometimes it gets overheated, sometimes it's undervalued, but people are going to wager trillions of dollars on these prices. And the market will be the referee or the judge. Like, awesome.
Exactly.
Yeah. Market's always right. Pomp, I got some listener questions for us. We'll wrap it up here with some listener questions.
Let's do it.
Throw it. All right. Okay. First one, there's a lot of speculation that some of the big Wall Street guys are artificially propping up Dogecoin to draw attention away from GameStop long enough to wind down more positions, in which case they're done holding it up. It would head right back to where it came from. What are your thoughts?
If we were doing like a buy or sell on that rumor, I'm a seller of that rumor. I don't think that Wall Street is propping up Dogecoin. I think what happened is exactly what my experience was, which was I woke up this morning to 3 or 4 texts and DMs of people being like, yo, should I buy Dogecoin? Right before I went to sleep, I had 1 or 2 people, like super legit people who were like, yeah, but I could flip in and out of it. And so I just was like, come on, man. And then today I had a reporter DM me and say, I'm thinking about writing an article to explain to people that Dogecoin and Bitcoin are different. And so that's what I think happened to Dogecoin was like just, a little bit of 2017 mania started to creep in. I don't think Wall Street was like, let's go screw around with the meme coin. Like Wall Street doesn't want to mess with the internet right now, right? Like they're pretty internet out for the moment.
Yeah.
Yeah, they're tuckered out.
Yeah. They're like, yo, if we go screw with these guys in their world, we can't call anyone to shut this off, right?
Exactly. And they don't even understand what the hell it is.
These
guys may short squeeze us over here.
Yeah. Insane. And shout out to Amy for the question. That was Amy. DJ. Shout out to her. I'm part of this a group chat, and like these guys all last night are like, hey, Ray, Dogecoin, what do you think? Blah blah. And I'm like, man, just don't mess around with this stuff. You guys have no idea what you're doing. Stay away. It's left and right. It's all over the place now. All right, next question. I'm most interested in hearing Pomp describe how, if, when all stocks, bonds, mutual funds, options, and exotics can be integrated or morphed onto blockchain. Exactly how would it work? Would each company have an independent chain or token?
Yeah. So my thesis for a long time has been every stock, bond, currency, commodity be digitized. If you could just go back pre-70s, 80s, everything was physical or analog. And all that means is just physical stock certificates, physical cash, physical mortgages, all that kind of stuff. And then we transitioned to an electronic QSIP world. And so today when you buy stock, you don't buy physical stock, you buy electronic QSIP, you buy cash, if you use it at the bank is electronic QSIP, it's not physical cash, all that kind of stuff. And so that transition basically drastically increased human productivity and built the global financial system we know today is all on these electronic QSIPs. We're just going to transition again. And so the beauty of the first transition from analog to electronic was you still bought the same asset from the same counterparty. It's just a new technology form factor. Same thing here, right? You're still going to buy a stock. You're still going to buy a bond, a currency, whatever. It's just going to be in this digital form factor rather than these electronic QSIPs. And so when it's digital, I think it'll be decentralized. And my guess is that each company won't have their own chain or anything crazy like that. It'll just be kind of a standard, open protocol, similar to like the internet. It'll just be kind of, maybe it's one, maybe it's five, whatever it ends up being, that just these open standards that everyone can tap into. And the beauty is it doesn't matter who you are, where you're born, which education, your wealth, and any of that stuff. Just so you get internet connection, you're in the game. And I think that's going to be great for just kind of humanity in general.
Exactly. And I think from a storage standpoint, having about 4 or 5 Rubbermaid bins full of worthless stock certificates that are nothing more than wallpaper now, that's just environmentally not friendly, right? So yeah, no, this is beautiful. I'm an old guy, and I'm just fascinated how you guys created a market out of thin air, and it got like so intense, and now you got institutions kind of going, what the hell is this? Maybe we should buy some. Hey, what is this? Right, I don't know, just buy some, and that's how it works on these desks. What is that? I don't know. Reddit, Schmeddit, buy it, and it's good. It's really good because this system, and I've been in it for a while. It needs a good shakeup. I got a good kick in the ass this week. It was fun to watch.
Sure did.
I think it's just getting warmed up, so that's the fun part.
Yeah, exactly. Yeah, it's a show. I love this. It's great entertainment.
It really is. It really is. Next question, exchanges, the KYC and the AML rules, how to stay anonymous in the US and still compliant. Boomers don't use VPNs and Proton Mail. How will that process work?
I'm out of my league on that one. I don't know. Look, I people know that I like Bitcoin. It's pretty obvious. And so I don't think I'm going anywhere anonymously or under any kind of pseudonym. So I got my real name. I got KYC AML'd all over the place. And good news is that I don't do any dumb shit. So I'm in the clear. But there's people who are probably way better at it than me. Off the top of my head, the two people that probably come to mind is Matt Odell and Marty Bent are two guys. They've got a podcast and they put out great content on Twitter and stuff like that. They're probably much better suited to kind of help with that stuff.
Yeah, good stuff. All right. I have so many coins on so many different exchanges, some probably out of business and wallets with those crazy lists of words. And I have a ledger thing. I mean, can we simplify this stuff? I'm pretty good with computers. And between my son and I, we have 2 kick-ass computers that should be mining coins. Is there any suggestions that are worth the hassle? Basically, what's his future view? Where will it be at 5, 10, 50 years?
Yeah. So, there's this company, I released a podcast episode today, is called Unstoppable Domains. Basically what they've created is human readable domains. So I have like pomp.crypto, right? And I can use pomp.crypto for my wallet address rather than use the long string of letters and random numbers. If you go back to the internet, like you used to have IP addresses. So you literally had to remember like 161.42.6.72.141. Right. And that was like, that's how you got to the domain. Yeah. Well, then somebody was like, oh shit, maybe we should just not have that long numbers and just call it google.com. Well, that's a genius idea, right? And like it made it human readable. And so like same thing's going to happen here, right? It's like eventually we'll have these human readable domains for the different wallet addresses and stuff like that. Just this stuff takes time. We're only 10, 12 years into it. So it's coming. Obviously it takes people to build this stuff. It takes, kind of capital to fund it. People have to be hired. The code has to be written, all that. But I think just stay patient.
No doubt. Shout out to Crypto Costa for those string of questions. Much love. We appreciate it. What does Pomp feel the role of the stock market truly is supposed to be for and what is it currently?
I mean, I just think it's a casino. I don't, you know, that at its most ultimate form, like, sure, you can have a super sophisticated model as to why you think what's going to happen is going to happen. You could, you know, I call it, you could wear a suit and tie, or you could be a criminal with cologne, but it doesn't matter. You're still, you know, just betting in a casino. And that's okay. Like that shouldn't be a bad thing. You're wagering, you're risking capital, right? And so you're smarter than going to an actual casino, right? In that there's better odds here, but at the same time, don't get it twisted. You're just taking risk, and you're betting on the future outcome of some event.
For sure. No, and you said it. This is the greatest casino. As someone who was a former poker player and one of my idols, Ed Thorpe. I mean, the guy who invented card counting. Once he found trading, he was like, wow, like this is the greatest casino. Really is. It's amazing. If you could give advice to the Wall Street Bets crowd, what would it be?
Keep going.
Keep going.
Yeah, I think it's awesome. And, you know, look, you got to do your work. Don't get crazy. Don't get like religious about it, whatever, but just keep going. Like, there's a guy in there who turned $50,000 into $30 million. And people are pissed about it on Wall Street. Too bad, right? Like, yeah, and there's a bunch of other people in there who made money too. Like, whatever.
Exactly.
Who am I to judge?
Yeah, exactly. Why is it that old guys, like, and I'm an old guy, why do these old guys get so mad when young people make money? That's when they should have money, so you can go out and rage, right? And have a good time, right? What the hell is $30 million use when you got a walker, right?
Well, maybe JJ, it's because it's not done in the way they did it, or it's done in a different fashion, and the generations are different. The slang is different. I think that's part of it.
I appreciate that, though. I think that's cool. That's creation.
Yeah. Well, you definitely have a different perspective than most. That's why we appreciate you. All right, last question we got here. I'd be curious as to his take as to not only his opinion why hedge fund managers are getting into the social debate media wars, making it worse for themselves. How can these so-called successful people like them build up businesses, be so unstrategic and unprofessional in dealing with people who collectively are the masses on social media?
It's the egotistical maniacs, and all of us are, right? Like, by the way, like every single one of us has some element of that in us. Some of us are better at it, controlling it than others. But even the guy who's got a pseudonymous account on Twitter and shoots off a random rocket emoji, like you're the same thing. It's just you're choosing to be a little bit more strategic, but that's just a human emotion. It's a human nature thing, and so. Make no mistake, when you've got billionaires that are still playing this game, they're not playing it for money, right? They're playing it to be right. They're playing it for reputation. They're playing for legacy. They're playing for all these other things other than the economic return. Now, that might be the scoreboard, but it becomes dangerous when you ask somebody, would you rather make money or would you rather be right? So, exactly. I think Naval, he's got a great thing. He's like, what is it called? You can play a status game, or you can play a wealth game, right? And so, like, yeah, there's a little bit of they're playing the wrong game in that moment, which by the way is fine. Like, they're human. Like, that's okay.
Yeah, for sure. Awesome. Well, that's going to conclude today's episode of Confessions of a Market Maker. If you guys enjoyed the show, please rate and review it for us. If you want to learn market auction theory, market profile, if you trade futures, equities, and/or options, join JJ and I at microefutures.com. Pomp, tell the people where they can find you. Anything else you want them to know?
Yeah, just go probably just the email I write every day, just pompletter.com. It's probably the best thing. Got like 120,000 people on there, and try my best not to sound like an idiot every morning.
No, you're the man. Appreciate the newsletter. Check out his podcast too. Really love the podcast. Subscribe to that, do all that. JJ, parting words?
Thank you so much for the education, and also thank you for your service. While we were sitting here complaining about bad Wi-Fi and lattes, you were out there getting, shot at, and we appreciate that. It allows us to do what we do.
Yeah.
Much appreciated.
Don't worry, we were complaining about the coffee too, so we were all together.
All right, and so for Anthony Pompliano, I'm Paulie Walnuts. He's the gorilla of House Street. You stops though.